Hey everyone, it's Jeff Eisenberg with Southern Oaks Mortgage. One of the questions I get asked a lot is, what is an FHA mortgage? Well, simply put, FHA stands for Federal Housing Administration. It's not actually a government loan, it's a government insured loan. So if you've ever heard of a HUD home, Housing Urban Development, that's what HUD stands for. Basically, that's an FHA loan that went into foreclosure. Then it becomes what's called a HUD home, okay? But FHA loans, almost every lender can do an FHA loan. And the unique thing about an FHA loan is it is insured by our government. So what happens is when you get an FHA loan, usually it's for first-time buyers, but not necessarily, you don't have to be a first-time buyer to get an FHA loan. It requires only 3.5% down. The debt to income ratio on a standard conventional loan is usually 50%, but on an FHA you can almost go up to 56%, so it allows you to qualify for more. The guidelines and the credit is much more lenient, so if you have not so good credit, an FHA is your better bet if you're putting a little money down, because if you go with a Fannie Mae or Freddie Mac conventional loan, credit is everything. In other words, if you have a 660 score on a conventional loan, your rate's going to be way up there, where FHA also has better rates even with the lower FICO scores. So FHA is a great first-time buyer program, but I've also done it many times for people that aren't first-time buyers. One other thing about an FHA loan that's very unique is that it allows you to purchase a house or get a loan 2 years after bankruptcy and 3 years after foreclosure. Whereas if you're going with a Fannie Mae or Freddie Mac conventional loan, it's 4 years on a bankruptcy and 7 years on a foreclosure. So qualifying is a lot easier on an FHA loan. To get in touch with us, all our information is below.